Hey guys, what's going on? It's Lewis here with Crypto Elite, and today we're doing another market update video. It is October 18th, or really it's Monday, October 17th, although you're probably watching this on the 18th. And we're going to do this because it has been a minute. I've been really occupied with a lot of important things, but now that that's all taken care of, back to the charts, and we're going to do this on the weekly basis and play level to level and see what happens. So I'm going to start off, and I'm going to start off with Bitcoin. I'm going to do Bitcoin. We're going to do Ethereum. Maybe I'll do, and then I'll do the dollar, the stocks, and that will probably be it. So this is going to be a quick one. I'm trying to make these as quick as possible. So I did a lot of my analysis beforehand, and we're just going to do it. All right. So looking at the Bitcoin monthly chart, what do we see on the monthly chart? We see the previous all-time highs from the last cycle right here, and I mapped that out in orange. So $19,891. That is the previous all-time high, and we are below that. So last month closed below that line, which was also the previous support. So that's really not good at all. And now we are still underneath of it. So just in the grand scheme of things, it would be much better to be above this pretty much 19,900 or $20,000 line, whatever you want to call it, previous all-time high. This would be the most ideal thing, is if we could come up above it. Until we do that, we are in the range between this line, which is the previous support term resistance, and the previous low, which is 17,605. And you could also argue that we're actually in this range right here between $13,763 and $20,000. So you could say 13.8 and 20, and this is the range that we're in now. And with saying this, I do want to just mention that I am actually a little bit leaning bullish right now for a couple things that we're going to get into, and that it is definitely a possibility that we do jump up back above this 19.9 level, and then we continue going on. So let's go down to the weekly time frame, see if we could see anything there. Okay, so on the weekly time frame, if you take the range low to the range high of the previous week, we are basically like not in the middle of it, because we're above the middle, but we're pretty close to the range high of last week. So I wouldn't want to buy right there. If you look at the bigger picture range though, you could see that we had a lot of wicks into this area, and I like this area right around like 21.5 as the weekly high, and this area down here anywhere between, honestly, 1800 is nice because we wicked down there twice. But the real one, if you go to the daily, you could see it a lot more clearly. The real one is more like around this area, right around here, which is pretty much like 18.9. That could be considered a low. But if we're just simply taking the weekly low to the weekly high right here, we're in the upper 25%, the top 25% of it. So it's not technically speaking, not a good opportunity to long right now, and you would want to wait for a pullback somewhere, even if I do think that we do end up going higher. But looking at the daily time frame, you can see that we did have this huge wick down into the previous low, or down here, and we actually, okay, I thought for a second we SFP'd it, but we didn't SFP it. So yeah, we came down, tapped the low. I guess this, you could consider this as a liquidity hunt, then came back up, and we never actually got back down to this level again. So looking at this is a daily, but I'll go down into the 4-hour to get a little bit more granular with it. And this is what I'll say. I'll say that this is the mid-range of the previous low to the previous high, and you could see that we actually tagged the 61.8 like right here perfectly, which is quite amazing. So that's awesome. And now we're on our way up after having this, what you could consider to be a liquidity hunt. And we are in the overbought territory right now. So these are the 3 levels. And I would say that if we come up above this level right here, you know, the 19,000 big resistance, AKA the 2018 all-time high, and the, you know, 2017, 2018 high. And if we come up here and are above here for a little bit and close, then maybe we could get in on a retrace back down below it and then target all the way up to potentially 23K, because that is how big of a level this is. And you could see even posting up right around here, you know, all of this whole area, it's not just one, you know, it's not just 2000, but anywhere between 19,900 and 19,300 area, 300, 400 area, like that's all huge resistance. But if we're going to use a point, I would rather use the point of either $20,000 or 19,900, because that was the previous, you know, all-time high. So that's pretty much what this is, 19,959. So I'm thinking I'm just going to wait when it comes to Bitcoin to get in until we come up and, you know, actually tag it. Or what you could do is go to the 1 hour time frame or below, and you could look for trade setups there. So right now, obviously, we're in this consolidation. So potentially you could make this a range like this, target the bottom of the range, and, you know, long the bottom right there and do something like this. And, you know, this is a possibility, and this is actually an 11.4 hour trade, but this still is only a 2.5%, you know, 2.45%, even though it is a 11, you know, hour trade, 11.55 hour trade. So I don't know, maybe on the 1 hour, you do want to do this, you know, plot the range lows, plot the range highs, and simply just think that we're going to have a continuation up, which is always you know, a plausible idea. But if you are playing more on the longer time frame, then it's real, or the higher time frame, you really want to wait until it comes up and then like consolidates and look for a retracement to get in, because you don't really know what's going to happen. The one thing that I will say though is that some cryptocurrencies are very tight right now. They're in a very tight range, and that usually indicates that we're going to have an explosive move in one way or another. And I am leaning a little bit bullish, so I might want to get into a couple of cryptocurrencies, or maybe have these type of trade setups that are just super tight, just to find out, just to be in it. But obviously, super tight stop losses are risky. So, or I guess they're less risky if you're depending on how you think of it, but they're risky in the sense that they're most likely going to get hit. So it's really up to you. It's really up to your preference. Let's move on though. Let's go to Ethereum. Or actually, right before we go to Ethereum, let me just say this. If we do end up actually coming all the way back down to this $1,900 level, and then like we close below it, I'm definitely going to short it, and I'm going to target down here like 18.1, and then probably lower, probably like 17.5. But I'm going to target here, and then if we close below here, then of course 17.5 is the target, and probably lower. But yeah, if we come up here then and close above that all-time high, that would make me a lot more bullish on Bitcoin. And so now we could go to Ethereum. Okay, so now I'm here in the flesh. I forgot to actually record my camera, but now I am recording my camera, and we go over Ethereum. So let's start off on the monthly chart, and it's very similar to the fact that this was previous all-time high for Ethereum at $1,424. And as long as we're below there, we're technically in the range between, you know, here and here. So that is what I would want to trade. I drew this out before because I was really hoping that from 800 we would get up to the 50% tile, and I would look for shorts here. But, you know, like we literally have just been crashing down and down and down, down, and we haven't really gotten any substantial pops this entire bear market, which really sucks because usually there's bear market rallies, and typically some of the rallies in the bear market are some of the biggest rallies that you get, you know, 100%, 150%, and then, you know, 200%, and then it crashes back down. But we really have not been getting those. We got one, I think, so far, maybe two, maybe one right here, and then one right here. But even this technically, from a Fibonacci perspective, which is my favorite tool to use, should have come up to at least, like, you know, 20, the 50%, and it didn't. So yeah, sort of missed out a lot on that, but that's why I'm now playing level to level, is because I've noticed that the Fibonacci for the big higher time frame Fibonacci's haven't been working as much. Although I guess technically if you did just target the 38.2, that could have worked out in your favor also. Regardless, let's just see where we are now. Right now we're below 1,424. And we're above 1,120, which was the previous low. So that's on the monthly chart. Let's go down to the weekly because there's going to be a lot more detail that we could find in the weekly. One thing that I found in the weekly was that we had the move down. This just continuate. Just damn, like, I mean, look at this. Just down, 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 down. Just absolute max pain right here for everyone. Not a single bounce. And we had this like pitiful bounce right here. But this right here was, you know, we had a bounce up and then a move down before a huge move up. So technically speaking, this move down before the move up that broke market structure is the, could be a bullish order block. It's honestly, it's easier to just go to the daily time frame and then say, here's the previous highs, you know, the big resistance, and then just look at this as a SR flip. And it's basically perfect. It came down into it, tapped it, and then had a swing failure pattern below it, and possibly, you know, that could be a liquidity hunt or whatever you want to call it. And now it's on its move up. So I do like Ethereum. So let's go down into the lower time frames and just check it out. What I wrote on Ethereum. So if I reset my chart and then we go into here, I wish it would do it a little bit better, but here we go. We have the weekly low down here of last week. We have the weekly high up here, and we are tapping the previous week's high right there. We actually are tapping it literally right now. So let's go down to the 4 hour, and if this right here, this is the target right now, to be honest, like, which is another 5.5% from where we are now. But look at the RSI and stochastic RSI, completely overbought right now. Lowering volume is down on these three candles that are moving up. So at least on the 4 hour, it doesn't look good. And usually we still have not actually risen above these swing highs right here and here. So I would like to see a move above here before I would think to get super long. Although if we are on the 4 hour, and I'm seeing this now, I am saying this. So this was the previous high. That was the close, you know, close up here, swing high, and we just couldn't never close back above it. We did finally close back above it right here. And obviously we are moving up now, tapping that 4 hour exponential moving average. This is the 200 exponential moving average on the 4 hour. So I do expect resistance because we're tapping this. We have, you know, completely overbought. And last time we had that, things obviously came down quite substantially. Pretty much every single time there has been a drop. So I would look at Ethereum because from here to here is probably a better you know, 6.5% compared to Bitcoin, which would be honestly like 2.5%. And even if we go to the highs, it would still be 4 or 5%. So Ethereum would be the better play if I had to play something. So I would probably look for ETH. But I wouldn't do it. I wouldn't do it right now because we're at a pretty big resistance and we're oversold and overbought. So I'd look for something for us to come down into. And I mean, this right here, this could be something. So maybe on the 1 hour, there's a better entry. Let me look for it. Okay, so on the 1 hour, you could see that we topped out here, and then on the RSI, we came up and we created a bearish divergence on the RSI, and now we're creating another bearish divergence on the RSI, but we are creating the stochastic is pretty good. So, and I am overall bullish. So if I wanted to get in on a pullback, this would be my trade setup right here. Is I would try to get in, if I could move this out of the way, I would try to get in right around the 50% mark from on the higher time frame. Let me go back to here on the higher time frame range, which is from here to here. This is about the 50% mark, and you can see there was a lot of wicks into it as support, a lot of wicks into it as support. A lot of wicks into it as support, a lot of wicks into it as support. Surprisingly, it didn't really act as resistance. It sort of just like popped up above it every single time and then acted as support. And then, yeah, it didn't really act as resistance except for right here, I suppose. But mostly support. Even right here was support, and then just kept on crashing down. So that's a really big SR flip area, is around $1,318. So I would want to get in on the lower time frames, $1,319, and my stop loss would be underneath the 38.2. So I would combine the range, the mid range, with the Fibonacci from the bottom to the top, and the fact that this is also that would also be a market structure break if we were coming up. Let's say we made the high, we made the low, we made the higher high, we made the low, we made another high. If we for some reason came down and closed below here, then that would be a bearish market structure break, because we would be closing below this previous low. And then, I mean, you don't really know what's going to happen in this market. It could do anything, but it might end up just doing something like this in that case. However, it could, or at least I could see it coming down here, but not closing below this before returning back up to this level. And that way it would remain in the upper part of this range right here, between here and here. It would remain in that upper quadrant, or in the upper 38.2, and that is typically bullish. So that's what I like to see. And so that's Ethereum. So I'll probably put this trade on for Ethereum, which is, a very, very solid, nearly 7%. 13R trade, absolutely insane. If I get this right, I am definitely going to be chopping this up and putting it in my reels and TikToks and stuff like that. That's for sure. And I'm going to do that. And then once we get up here, definitely close it. I'll probably close some of it right here, just because there's a resistance. But I would close it up here, all of it, and then we would have to close above this level. And if we closed above 1400, then I would target somewhere down here as an entry. I would enter somewhere over here, and I would target all the way up to 1600, potentially even 1700. But that's not going to be for, potentially a couple days. I don't know. It could be tomorrow, but this is just what I'm going to play right now, this very second. So I'll do that, and let me just publish this idea real quick. Moving on to the Ethereum against Bitcoin chart. Overall, I'm still expecting it to come all the way down here and we have a pretty big crash. However, right now, you could see that we had this huge drop off. And during that time, we had on the daily chart, we had made a low, just a stagnation, a low rebound to make a lower high compared to this, a lower low, a lower high. This whole area was a lower high. Down here, a lower low compared to here, and then a lower high compared to back here, and then finally a lower low down here. And now this time right here, this is the first time that we're actually making an equal high. So if this right here, if the price came back up to this level, we would have made an equal high, but we didn't. And if price came back up to here, we would have made an equal high, and it closed. And I mean, if price came up and closed around here, the same how it's doing it right there, then this would have been an equal high, but it didn't. And same thing with this up here. Obviously, it didn't even get close. So we just made lower highs, lower lows, lower highs, lower lows, and then finally a equal high. So this isn't indicative of a market structure change, but it is the first time that we got an equal high as opposed to a lower high, which is the start of something that could be, potentially bullish. And as I showed you before in the Ethereum against Bitcoin chart, or the Ethereum chart and then the Bitcoin chart, Ethereum has a 6 to 7% potential move up. Bitcoin has a 4 to 5% potential move up. So that's why I'm choosing Ethereum. The other thing though is that you could look at on the 4-hour charts, Ethereum against Bitcoin, and you could see the shifting in the market structure. So you could see that it's, was down, the highs and the lows kept on basically getting lower and lower and lower, sort of stagnated right here. And then we had this like sort of move down, sweep all of these lows back there, and then pop all the way back up, come back to retest the previous support area, back here, this whole big support, and then move up. So that's pretty good. I like that. That could be potentially considered to be over under. And so I am looking for a potential move to like maybe right here. So like everything goes down, Ethereum goes down a little bit further than Bitcoin, and then continuation up, continuation to move up. And so that's Ethereum against BTC. So that sort of goes with my theory of like, I want it to move higher, but probably the biggest reason why I think that we're going to get a little bit of a pullback, but potentially move higher right now is the dollar. So let's go into that. Okay, so I'm looking at the dollar now, and first thing that I want to say, which is very, very telling, let's look at the weekly chart. I'll show you this. Look at the weekly chart. Go all the way back to January of this year, January 2022, and you could see that the first high that we made in January was right here. So this was the first high that we made in January. And then it came back, it came down, and then we came up and made our higher high. Came down, and then came all the way up, made a much, much higher high. We came down, we came up, we made a higher high. We came down, we came up, we made a higher high. We came down, we came up, made a higher high right here. Came down, came up, and made a higher high right here. Came down, came up. And right now, this is a lower high. This is the first lower high in 10 months from here, all the way that I just showed you. This right here is lower than this. So this high, weekly high, is lower than this weekly high, which means that this is a lower high, and it's the first lower high on the weekly chart on the dollar that we've had in 10 months. That to me is signifying a weakening of the dollar. Not to mention, it actually happened at the high time frame target that I put out weeks and weeks and weeks ago, saying that we're gonna fall from here. So I do like that fact that happened. And if the dollar, so basically, if the dollar comes back up above this high right here, it's over. Like, we're going to go to 14K probably. This is what I had up here. We're going to go to 17.5 and then drop further. If the dollar rallies all the way back up and closes somewhere above here, maybe like it's going to go high. It's going to create a new all-time high. So we'll be totally screwed. But for right now at least go to the 4. Let's go to the 4 hour. You could see that we were making higher highs, higher lows, and it was doing its thing. And then we had this swing failure pattern right here. So these were let me draw this out. These were the highs, all of the highs, and then it came above it and then closed down below it. So that's a swing failure pattern. And then we crashed. We came back up to the previous resistance, which is the supply area. And then we crashed back down. And not only did we crash back down, but this candle right here made a lower low. So that's a market structure break to the downside. The moving averages crossed over to the downside, and we had some consolidation and then another drop. So the dollar is looking pretty weak is what I'm trying to say. I'm trying to say the dollar is looking fairly weak right now, and that's a good thing for Bitcoin. So if the dollar falls, Bitcoin rises and cryptocurrencies rise. So I'm hoping that we see something, maybe we see something like this where the dollar, goes up today and tomorrow and, makes some higher, goes up and everything else goes down in crypto, so I can get my fills in, and then it ends up coming back down to this line right here, which if we zoom out, you could see it was been support. So definitely want to get the hell out of crypto as soon as the dollar comes down anywhere close, let's say 111.5. Yeah, if it comes down to 111.5, I'm out, of all crypto. I'm selling it all because I think that this support will hold. So, and maybe we'll definitely have a bounce. Most likely we'll have a bounce in the dollar, and maybe we'll have a bounce back up to here and then continue to fall, and we'll break this huge channel that the dollar has been in since August 11th. Which would be amazing if we could break this to the downside. Although I am always really weary of channels because look at this. This was the channel, broke to the upside and then fell down below it. And typically, these are fake outs. So it'll probably fall down below it, and then come back up. And crypto will shit the bed when it does that. So crypto will do really, really well as it falls down below. And then everyone will get excited and say, oh, look, it fell below here. And then it'll just pop up and we'll all get totally slammed. So that is the dollar, and that's why I am more bullish right now than not. Also, there is the NASDAQ, which on the monthly chart you could see hit the 61.8. So if we take the Fibonacci from the bottom to the top, 61.8 is right there. It tapped to 61.8, so that's pretty solid. Got a tap and then a nice move up, and the move up actually moved up to above at least today, moved up to above the previous areas of support and resistance, which is right here. And it's closed above it. It's closed above it, and the RSI and stochastic RSI on the weekly are looking really good. On the daily time frame, we still need to get above here, but to have a change in the trend, actually not really, because you could argue that this candle right here and then the down move and now the move above it, you could argue that this was a market structure break to the upside, which is good for stocks. Although this was technically a market structure break to the upside as well, and you would want to get in on a retracement, but then it fell down below it. So you never can tell with these things. But that's the NASDAQ, and then when it comes to the S&P 500, we had that. Let's go to the monthly chart right here. We have the previous monthly highs right there, and actually on the weekly chart it was a double top. So I want to use the weekly chart. On the weekly chart, you can see it was a top right there, another top right there, and then another resistance right there. So really a triple resistance, but basically a double top, and we tapped that and then shot up today. Really just shot up today. Like this was a big one. So I would expect a move down followed by a continuation up if we're going to continue this week up, and this is what I'm hoping for. I'm hoping for a move down into the basically the order block. If I go to the 4 hour, maybe there's yeah, I would say okay. So this right here, this was the move up before the actually, hold on a second. Let me just look at this real quick. Yeah, okay. So you could see we had a huge move up off of that double top slash support resistance area. And that was also the 50% Fibonacci retracement. So if I go to the daily chart, you'll be able to see that, or I guess the weekly chart, you'll be able to see that. Fibonacci, take the Fibonacci from the bottom to the top, look for 50%. It's right there. There's the 50%. And it tapped the 50%. So it was the 50% of this entire move up. I will say I do expect this area 3,200 to be met eventually. So that is my ultimate goal. But as for right now, like short term, we're doing what we're doing. And so on the 4 hour chart, you could see that, we went down, we went down, we went down, we went down. We had this big support area right here, this demand zone. We tapped it, fell down below it, tapped the 50% double top, and then SR flip area, and rallied all the way up, retraced back to this breaker. So this originally was an order block, was a bearish order block. And when we came back above it and we just rallied, zoomed right above it, it became a breaker, which means that you want to get in once the price comes back down into this breaker, which it did. And then you could have gotten in there. And then, obviously there's a nice rally so far. This move right here, this was an up move before the down move that broke this market structure right there. So you could say that this was the bearish order block, and when the price came up into here, you would want to short it, but the price came up and it continued to rally. So now this is a breaker as well. So I would want to get in on a retracement back down to this breaker and potentially a little bit lower. Maybe it'll, go like that. But I do think that this just goes more in confluence with everything else I've been saying, where I think we're going to get a retracement today and tomorrow and maybe the next day. And then I expect a whole move up, and I hope that the S&P 500 goes up to 3,800 after that, which is the supply zone, which would also stop a lot of people out, because I'm sure a lot of people have their stop losses right in, in this area above this previous top. So they're going to be shorting this whole area over here around 3,800, and they're going to be shorting, and then we'll probably get a move up into here to stop all of them out before a move way down. Plus there's also October and November, which are typically bullish months. So I'm just leaning bullish. I'm leaning bullish overall. That's my game plan. And I think that's going to be it for this market update. I don't want to go too far. One thing I will say, Quant is absolutely crushing it. Absolutely love Quant. Although it's up so much, and that I would, this is a pretty gnarly weekly candle. So I would go down into lower time frames and probably look for areas to take some profits, or maybe just take my profits from Quant if I was in it in a trade, and then move it into something else that I would think would be potentially more profitable than Quant would be. So that is pretty much going to be it. Oh yeah, one other thing I noticed ADA Cardano is in a really nice place, in my opinion. We've had a few months of, just down only, and this was the previous 2021 basically monthly close, which is a very nice area. And so I like how it's in this zone right here, close to the monthly support. So I do have a long position on Cardano. I don't know if it's not a degen play because I have a pretty tight stop on it, but I do have a long position in for Cardano somewhere around here, and I'm basically having this be the my stop loss, because I think that this was a liquidity, tap of liquidity, and I don't think it should come down here again. So there's that. And when it comes to Link and Bitcoin, the thing is, I don't like how Link had this market structure break to the downside against Bitcoin, and you can see that it's falling again against Bitcoin. So because it had this market structure break against Bitcoin to the downside, where it broke below this low, this previous low. That was the first time that that happened since literally May. I would rather be in Bitcoin than Link. So I know there's a lot of people in Link, and I was in Link. I was all in Link, to be honest. I was all in Link, almost, not all, but I was heavily in Link. But as soon as this happened, as soon as we broke below here, I closed out my position, and I am now, I'd rather be in Bitcoin. So I moved it over to Bitcoin instead, because Bitcoin should outperform Link. And so that's what I'm saying with that. Matic also looks pretty good, but I'll have to do an analysis on Matic later. And so that's going to be the market update for today. If you enjoyed this, please like and subscribe. It would be awesome if you did that, because I'm trying to grow this YouTube channel big, and I'm going to try to put out videos every single day. I'm seriously taking this extremely seriously for starting right now, literally starting today. So expect a ton of videos. I'm finished with all of the bull crap that I've been dealing with over the last week or two, dealing with just really important stuff. I'm finished with that. So now I am focusing 100% on making content for you guys. And so lots of educational content, lots of market updates, lots of pretty much everything I could think of. I have a ton of books. I'm going to be doing reviews and basically explanations of everything. So yeah, lots to look forward to. So definitely hit that like, hit that subscribe if you're not subscribed. Follow me on Twitter at Louis Raskin and TikTok. TikTok's going to be huge. And I'll see you in the next video. Thank you so much. All right. Peace out. Bye.